Hi everyone, so today we'll do a stock analysis on Adecoagro S.A, ticker AGRO AGRO, and it's a agricultural and agro-industrial company. Quick disclaimer, I'm not a financial advisor, this is my own research, up to you to make your own decision. So in this video we'll go with a company profile, fundamental analysis including the insider ownership, technical analysis, price catalyst. In this case it would be potentially all the commodities, and then a conclusion. So let's start with the company, a little description. So the company is called Adecoagro S.A, and its assets are mainly located in Argentina, Brazil, Chile, and Uruguay. They have two segments. One is farming, so any kind of food, I will show you later. And then the second part is sugar, ethanol, and energy, so they call that renewable energy. We'll get to it after. And they have over 10,000 employees, and the company was founded in 2002 and is based in Luxembourg. So interestingly, this is not an ADR in this case, because usually South America has ADR, but in this case is because it's based in Luxembourg, I guess. It doesn't actually have that as a negative side like others have, so I kind of like that. I mean, at least I prefer when the companies are not ADR. So I forgot to mention what ADR was, and it's pretty much a American depository receipt. So it's like a bank, a US bank, that will actually provide the share through it, but you cannot directly like buy those shares, so it's like an intermediate, so they will charge you fees, so it's not as good. That's why I wanted to clarify that. So in this case, because they don't have that, it's actually better. So let's get now to the slide. So there's like two major things that I wanted to talk about. Is that they're mainly doing sugar, ethanol, and energy in Brazil, and after that the other trees, crop, rice, and dairy are pretty much in Chile, Argentina, and Uruguay, all of that. So so it's pretty much separated, and like, yeah, I mean, like, we can go through it, but basically they have 3 mills in sugar and ethanol, and then like they have 200,000 hectares of sugar cane, and then after for the crops 240,000 hectares of corn, wheat, soy, peanuts, and sunflower. Then they have as well the rice, 64,000 hectares, and then after the dairy, so 4 dairy-free stores, and yeah, that's pretty much, like, no need to go further into details, but to give you an idea of what they actually own. So it's pretty much kind of a big farming company in a way, which is interesting. So in total 580,000 hectares under management. So I thought that slide was interesting as well. By the way, the presentation you can find on their website. So I just took it and now doing a video on it. So like the company was founded in 2002 in there. Then after they pretty much expanded their business in Uruguay, Brazil from 2004 to 2010, and like they expanded a bit, and then they listed to the New York Stock Exchange in 2011, and then since then they're pretty much doing some like consolidation and expansion. So this slide shows how the earnings are allocated. So in this case it's 60% into like pretty much expansion, and then like 40% to dividend or like buybacks. Sorry for my writing, it's hard. But yeah, so in this case what we notice as well is that there's like their debt repayment will take a few years long term, so as long as they keep bringing cash flow it will be fine. And then they talk about the expansion in sugarcane, rice, and warehouse. This slide explain I think pretty well how the sales are distributed. So the actually the Brazil part, like sugar, ethanol, and energy, represent 50%, and then the farming represent around like 50% as well, 52. And it's quite well distributed in that sense. But when you look at adjusted EBITDA, I'm not a huge fan of EBITDA, but just to give you a representation, it seems to be that nearly 80% of it, the before earnings is actually on sugar, ethanol, and energy, and way less on farming. So we get a bit more info later. And finally, before we go to fundamentals, just wanted to show this slide that was really explanatory, I would say. So this is their growth. So it's pretty nice to see a growth like this, to be honest, since 2000. And this is the year that they've been into the stock market, and then like since then they've been pretty much growing all the time, every year, slowly but surely. And then like it's pretty much like sugar represent a little over 50% from what I'm seeing here, but it's, I think, looks like they're trying to keep it 50-50 between the two segments. So now let's talk about the fundamental analysis. So at the moment the market cap is under 1 billion. Its P is around 10, and historically has been way lower, somewhere around like 4 to 6 or 8. And then like the price to book and like price to sell and all that are very low. I mean, price to book 0.66, sorry, and enterprise value to revenue is 1. I mean, all that is pretty low, which is usually what I like. So then next we're gonna look at the income statement. Nothing crazy, but I would say like a normal company. The cash is 200 million for 1 billion debt, a little bit high, but you know, nothing crazy. And then the cash flow is 50 million, and then like after that, so insider 71%, I don't think that's right. We'll show you guys later. And then they're giving around 4% dividend and a payout ratio of 40%. So I would say that's quite reasonable. You won't make a 10x return on that one over the next 2 years, but I would say you might get something like maybe 8 to 15% maybe, if it's in the right cycle as well. So I like to show more because this company had a lot of great slides that were explaining everything. And like so you can see that the net debt, they've been working on it, so it's been reduced. And then like their capex is like increasing recently again, so maybe they're expanding into producing more, but the return has been pretty good over the past few years. Before that it was a little bit like much lower actually, but recently it's been better. So again, this is a little similar slide, but they've been growing their sale, growing their free cash flow from operation. And then again here you can see that ethanol, sugar, and energy are around 50%, and then the rest, dairies and all the farming segment, is around 50%. The debt maturity around 462 millions. We need to be paid back in 2027. So as long as they find a free cash flow, or the cash flow, sorry, to pay back their debt, they will be fine. So this is the on my side what I do my little research on my side, so I can compare with the slide. That's the good part in this case. So the current asset is fairly stable. There's no like serious risk. So the good thing that I like as well is that their equity has been rising while the debt going down, exactly like they were showing in their slides. And then like their cash has been, I would say, more or less stable, nothing crazy. And then you can see that they're expanding slowly, but for sure. And you can see that it's been reducing a little bit the debt and then increasing the equity. So it looks like farming in general or anything related to agriculture seems to relate a little bit with retail, in my opinion, because the revenues tend to be way bigger and then the earnings tend to be quite small. So yeah, and so in this case, like you can see the growth again, slow but steady. So in here the cash flow is a bit reduced, and the expenditure is growing a little bit. I'm not too concerned because I know in terms of cyclicality that the 2024 and 25 is not being great, so I expect that they will potentially pick up again in the next 1 or 2 years, but to watch out in case it doesn't. And yeah, like expenditure slowly rising, increasing, which is not ideal, but it's not like really huge. So if it was like 100% increase year over year, I would be very concerned, but it's not the case. And as they've been talking in their slides, they've been pretty much doing what they said. They reduced their shares, they've done buybacks, and seems like they've been giving dividends as well from what I'm seeing. So I don't own the stock or haven't owned it yet, but I'm just doing analysis. And what I like is that whatever they said they will do, they did, and quite like that part. So as you can see in on the left side, there's an insider transaction that I got it from Simply Wall Street. So it shows that actually a shareholder has been buying a lot, and that has been over the past year pretty much. And it's actually the first one, which is Tether Holding. So they own already 20% of the company, so as of these months. So they've probably been buying a lot to 20% now. So I would say they could potentially, if they continue, take over the company. So to watch, that's not really a concerning part, to be honest. But just to watch out. And then like the management and directors own around 7%. So that seems to be more correct. So this is from their slide, so at least it's more official. Then the Yahoo Finance one that was saying 70%. And so 7%, which is I think pretty good for a company like that. I like when the directors have skin in the game. And that's about it. You can see like the banks they've been using as well. I like that they've been pretty transparent. So now let's talk about technical analysis. So in this case, I took only the weekly on the agro stock, and nothing has happened since 2012, to be honest. Like the company has been growing a lot, but the price of the stock has not moved. I wonder why, to be honest, if it's a currency thing or just the fact that no one's interested in agriculture or anything like that. But personally, what I'm seeing in here is that, so the current price is around 9. What I'm seeing, to be honest, is like I like this kind of liquidity there, and like I wonder if it could reach to that level. It would be like a gift, to be honest. Because like at those prices already cheap, but I think at like 7 or 6, that would, I think, make me way more interested, to be honest. At the moment, I think it's reasonable, and honestly nothing wrong with the price, but just like if it was 7, it would be like, to me, bigger return potential, because the lower the price, the bigger the return as well. So yeah, that's all I'm seeing. And like at the moment, interestingly, it could potentially go back up, like from what I'm seeing, but like in the next few weeks, especially because of the big drop. But I wonder, if it's going to continue downside on that. No matter what, I still think like 9 is reasonable, but 7, like as you can see in the last 10 years, would be at a good discount. So as a price catalyst, I decided to pick the commodity CRB index, which is pretty much the generic one. I could have picked something more related to sugar or to dairy and stuff like the milk or whatever, but I mean, it's because they are diversified. I would say commodities in general might be the most like logical way to go. So in this case, we can actually see that since 2012 the price hasn't budged either, so it's been going down and then up. Actually, the company has been managing fairly well, if you notice, because they've been going down for the next 8 years and the stock hasn't really dropped that much, but when it went up, it didn't go up either too much. But it shows that at least it's consistent with the chart overall of commodities in general. So right now I would say it looks pretty bullish. We broke that structure in there, and then seems like we are on the way to potentially break that high and then move higher. This is the most likely scenario at the moment. So looking at it, I wonder if price will be able to reach 7 on the stock like we said, but I mean, like, you never know. Sometimes it does, sometimes it doesn't. So at 9 is reasonable anyway, but I think at 7 is a bigger discount. That's it. So as a conclusion, I think it's a overall pretty good company. Nothing like crazy discount or anything, but like fairly stable as well. So if like I would say that the fact that the management owns 7% of the company is a good thing. Institution buying, so there's one that has already 20% of the company, so they probably seeing something for sure. That seems to be manageable. Then the technical analysis commodities looks bullish, so we have that at least on our side, so it's a tailwind. And then like buyback and dividends are reasonable. I think it's pretty like safe. And I would say this risk are mainly with the stock, because nothing happened in the last 10 years with that change, so let's hope it does. Then can they pay back their debt in 2027? So I noticed that 2027 they have like quite a lot of the debt there, so as long as they can figure out a way to pay that back at that time, or like delay it maybe later, then I think there's no reason that it wouldn't go right. But it's a risk nonetheless. And I would say I wanted to add a little section that I haven't done before, where I just give you an idea. So I think, in my opinion, this is more of a potential 2-3x in the next 5 years. Compared with all the companies that have been showing, I think this is more safe and less like risky, whereas what I've shown was a little more like crazy, like it could literally drop 60, go up, but then potential reward maybe 5 to 10. In this case, it's more reasonable, and like I think it's nice to see this kind of stock too. And I would say something like 7 out of 10, and to me, honestly, it's a pretty good one. Let's just put 7 because the risk reward is not as high as I would like. I would say if it goes to the price of the stock 7, I would actually probably bump it higher to 8 or 9, but just to give you an idea of what I think of it. So to me, I think it's reasonable. It's fairly like the company, but not like love it to make sense. So yeah, that's it for today. I hope you enjoyed the video, and see you in the next video.